The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. As always, conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. It is 5:50 a.m. and some seconds, and many of you watching this will watch this will watch this later in the day, in the morning, more than likely. And I always want to put a perspective down of what's going on. It's quite challenging what's happening with the dollar as it relates to oil and gold. What's happening, Kwame? What's happening? Thank you for being here this morning. So you must be a trader or you're in another time zone. Let me get this off the screen and get with the switch to my charts. Okay. This is a daily chart of the dollar versus the Swiss franc. I just wanted to show it just for a quick, just to show the bullishness of this particular move. Before I get started, I just want to, for those of you who are not really chart readers, just a very basic relationship between I want to explain a very basic relationship between the dollar and other common or popular assets. The dollar typically trades opposite the direction of oil and gold. So when the dollar goes up, oil and gold typically goes down. But that's not exactly happening to that script. So it's kind of strange, but which is worth watching. So the most bullish asset this year, from the beginning of this year, has been oil. And this is a dollar chart here, and I'm going to go back to the beginning just to establish the bigger context. Let's see, let me go to a line chart. Okay, this is the dollar since 1971. This is around when we came off the gold standard. So the common direction for the dollar is down. That's not a problem necessarily that it's falling. Okay, because the dollar losing value, the benefit of that accrues to metals, energy, and other commodities. The value of your house going up is related to the decline in the dollar, because the materials used to build that house go up in value as the dollar declines. This is a gross oversimplification, but still correct. Okay, just want to make the point, so make it easier for people who don't follow this all the time to understand. So all right, yeah, so the dollar losing value is beneficial to the material cost of building a house. The dollar losing value is beneficial to the interest rate going down. So the dollar losing value makes it affordable for you to get the loan and to build the house. Now, from time to time, the dollar goes into upswings, and when it does, it's pretty devastating. We see here that we broke a trend line on the low that the dollar hit way back in 2011. So if you were to look at ask yourself, what has the dollar been doing really pretty much since 2011, I would define this as the dollar has been trending up or and sideways. More is I can't really make an argument looking at this that it's been going down since 2011. It's been going up and sideways, right? So there's debate about what the dollar, where it's going next, and you can kind of see a little nice little. Let's make a little triangle. Let's let's go to art school. You know, we got a symmetrical triangle pattern. And a symmetrical triangle pattern can break either way. It's not a perfect symmetrical triangle. It can break either way, which is also adding to a little bit of drama. I want to pick a better color. Yeah, there you go. It can break either way. But we're coming towards the skinny end of this triangle. So it's gonna break one way or the other. In my opinion, the bias is that I'm biased that it's gonna break up, go up. And so the dollar rising has a devastating effect on material costs. Those costs come down. The interest rate tends to rise. Gold tends to fall. Oil tends to fall. Now that that's the historic relationship. It's not necessarily playing the script right now, but that's what we have to pay attention to. In my view, the dollar is likely to rise. And let me say my conservative view is that the dollar is likely to rise up to this area. Okay. Now there's a more devastating perspective. If it goes past this area, it could approach these levels that we knew back in 2010. It could get, this would be prolonged pain. Okay, this would be prolonged pain. You know, be looking for that ceiling too. Maybe it'll stop there. But my conservative opinion is that we are very likely to have the dollar rise to this level, which would cause a correction in energy and metals and spike the interest rate. All right. So what I wanted to do in this video is just take a whip around those assets, and of course I can't leave out other currencies of other countries. Now, as a technical trader, we don't buy the view necessarily that that news events like war and Ukraine and things like that's the cause agent for price moving. I mean, as you see, this low was established back 11 years ago. Okay, and if you look on my past videos, I've been discussing this scenario of the dollar rising. So it's not related. Okay, it's from the technical view is that news does not affect price. Okay, so I know that's a radical view for folks who are more fundamental in their bias or their outlook on things, but I'm here to share the technical perspective. And let's take a look at the euro. So what happens when the dollar starts to rise and major commodities are denominated in the dollar, because dollar is default currency of the world? It makes debt that's owed in dollars more expensive. So other countries will sell their currency for the dollar. So it creates a global demand for the dollar. So this would be new to me too. I didn't even really look at the euro. I planned on look, and I was just talking about oil and energy. But now I'm curious about it. I want to see. It's just been looking strange. A lot of these correlations, historic correlations, have been breaking down, but this one looks pretty good. So it's declining. But let me go to the daily. Oh my God. Okay. Okay. Let's see a candlestick. This is the candle from today, and this is Friday. So it's bleeding bad. It's bleeding bad. Now, ah, man. Okay, this is the low from 2020. You may recall the stock market had a nice rise since 2020, and the dollar uh, started rising. And this top right here is January of 2021. The dollar chart we were just looking at. Let me go show that real quick again. Um, I don't need to come back to this, but I'm getting confirmation of what I expected, that the other major currencies. I mean, the euro is a pretty big and mighty one. The other central banks in the London market is open right now, so they are in session. New York, our central bank starts trading in the morning, so we're looking at the impact of the European Central Bank. You know, they are selling off their currency, their own currency. And then you look at the US dollar, and you see that green bar there. So that's the transfer from they're selling their currency, buying ours. If you be looking at other, let's look at the dollar yen, it should be the same. Look at the British pound. Not that big, but this is from today. We call this an inside. It's an inside trade here. So it's we'll see if it makes a higher high, but it's gonna look like the rest of it's gonna look like the rest of the world. Okay. And you still see this kind of triangle looking shape here, which deal. Let's see, Great British Pound, US dollar. Let's take a look at that. Ugly, ugly, ugly. Let me go back to the yen to be clear. Wait a minute. Be clear. I'm not. This is early for me. I actually set an alarm to wake up. Okay. This chart is showing the value of the yen relative to the dollar. Okay. So we know the dollar is rising. Okay. And so that's why this is green. It's going to continue going up. It's not yen strength. Okay. This is dollar strength. Okay. So that's what that is. Great British Pound, US dollar. So what is the relationship of the British pound to the dollar? Just like the euro, they're selling off. Okay, they're selling off, and this is technically significant that we made a lower low today. It price dropped below the low from December, the end of last year. So when that happens, typically you have a more extended move. So this is not likely to end, in a couple of days. So, or it depends on how fast it drops. Let me just say, this suggests a more extended decline. Now, how I'm not going to get into how long that takes. I didn't mean to infer that, but it's not. This trend is not likely to stop. without some serious damage, put it that way. Okay. And so we'll see. I'm not talking about falling off the bottom of the page. Okay. Let's first just deal with I would say, let me get my Fibonacci tool here. Try not to get too much into the technicals, too deep. And that's for the Patreon crowd. This is the kind of stuff we talk about and trade. I'm already long the dollar. Okay, so this would be the next area where we're likely to fall. This is a typical Elliott wave structure ABC pattern, with this being the A wave. This a B wave 50% retrace is quite common, and as common as this price movement has looked since the decline, the most typical destination is here. It's not guaranteed; it could go more, but the most common extension from this low is here. We don't just buy or trade because it reaches this level. We look for additional clues once the price gets there. But I'm just trying to just give a general idea that we're going to be in this state for this pain is going to last a little while longer, because just like the move from here to from this bottom, this is like 3 months. No. This top is January, and this bottom is December. So that was about a month. Okay, that was about a month. So I'm not saying this gonna last a month. It's gonna go a good deal. Let's just talk in percentage terms. Let me do it that way. So from where we are now to get down to this level, that would be the British pound losing 4.89%. Okay, just under 5%. Okay, that would be the dollar gaining on the euro, because these values here are showing you that for every $1, the British, I'm sorry, not the euro, this is the British pound. For every $1 US, the British pound is worth 1.31 for every US dollar. But that spread or difference between the two is going to narrow some. Now, this seems like a small amount, but it has significant impact to a lot of like I said, energy and metals, and especially companies that trade goods into other countries, because the value of that is affected by the value of those currencies. Or if you make goods in one country, you have to pay those workers a certain amount, and then you're selling it into another market with buyers that may or may not be able to afford that product. Okay, so it throws off the balance, So let's see what else I wanted to take a look at. So we look. Oh, oil. Oil's the star. Oil has been. Let me show you. Let's go here first. The number one. Let me see. Did I unmute my mic? It's so early in the morning. I gotta make sure I did that. Yeah, I did. This is real early. All right, let's see. And I'm surprised y'all rocking with me. I was like, let me get in here and sneak and post this. And this is the reverse. I wanted to see the winners since the beginning of the year. And I trade ETFs. My focus when I'm investing is industry based. Okay, because sectors and industries drive the market, not individual companies. Companies exist in industries and sectors, and money rotates from industries and sectors, or between from one industry and sector to another industry and sector. It doesn't move. Money does not move from stock to stock. Money moves from industry and sector to another industry and sector. Okay. Because when the macroeconomic environment favors a certain type of business, all of the companies in that business, in that industry, uh, pretty much do well. Even horribly managed companies do well. Hence the saying, the tide raises all boats. And the back half of that statement is and sinks all ships. Okay. So when it goes down, when it goes up, it's good for everybody in that industry and sector. And when the macroeconomic factors and the price of money is a big part of that, when that changes, it's devastating for all of the companies in that industry. It doesn't matter if you're talking Tesla, Apple, nothing is immune, nothing can survive uh, when the money rotates away from that space. So great companies with profit and good management, their price goes down too. Okay, so you can't necessarily use the logic of they make a great product and everybody's buying it. The price, it's not going to go down as long as people are buying the product. That's not true. That's faulty logic. It doesn't work like that. Yeah. So that's why you really have to watch the charts. You can't have it's false comfort to think that just because it's a great product, or like everybody is home watching Netflix, therefore because of the pandemic, therefore Netflix is safe. That's faulty logic. Okay, it doesn't work like that. But on this list of the year-to-date performance, what do we see at the top? Oil, energy. Come down a little bit, we see gold. Okay, so let me zoom around here. We're gonna look at so I covered the currency part, and let's look at oil. Like I said, I'm gonna look at the futures. This is a future chart of West Texas Intermediate. Okay, crude oil. Don't do this to me. This daggone page is sometimes they do maintenance on their site, and I really like this particular page. Yeah, come on. Okay. Let me try this, because so all my other stuff is messy, marked up. Let's see. I think this is W. See, now I'm gonna be searching. I need this thing to work. Don't do this. It had never done this to me during a live show. I guess that's why we edit. Okay, let me try futures, oil, energy. Because the commodities market is open right now, and that activity gives you a little bit of a peek into what's likely to happen when the market's open. Okay, where is the... Okay, this contract is the next one, and we'll see what it is. Now, in Elliott wave theory parlance, this particular chart, I meant to do this. This chart looks like it's completed a five-way structure, so it's in a danger zone. I was reading Mike V sent me a video of a stock analyst, I guess I would call the person, recommending that people avoid buying oil, and I was encouraged by that because you rarely hear that. You rarely hear people on TV telling you not to buy something, and because the price is at such a high level that it's dangerous right here, and it gapped up, and we call this candle a shooting star. And this is a daily, and the shooting star is a reversal uh, candle, and this wick here, that's considered price rejection. So the price came up this high, and the market said, "No, that's too high. That's too high." And so there's a battle going on for what the top is in oil. And in 2020, let's see what time frame am I looking at here. This is daily. I'm trying to go back to 2020 to show you guys the whole rise. While everybody had Bitcoin on the brain, and I'm watching these folks on these Bitcoin channels talk all this crap about how nothing else in the world is making money but Bitcoin, and no, everything make money. I'm not against Bitcoin. I'm not pro against. I'm pro knowledge. Okay, that's my thing. All right, learn. Money's being made in the old stuff and the new stuff. This low is, and this was the low. It's around 34 in this contract, and this high is 130. So it's near 10x. Okay, so you don't when something and this looks like a five-way structure, Elliott wave. This is looking pretty complete. Okay, this is a dangerous nosebleed area to be buying it. And after a five-way structure, there's a pretty severe correction. It can be typically 50% or up to almost 80%. Now, and that's on the positive side. Um, we could be wrong about it being a correction, and instead it could be a reversal and go lower. But I don't think that's what's going on. I think we're going to do a correction, and it could be between the 50 to 80% degree. So while we were talking about Bitcoin, oil was, stealing the show. The Beverly Hillbillies was making money. So we're gonna have to watch this correction, not get bitten by it, and then, of course, I'll be making videos when we get to an area where I think that it looks good to jump in, because we can't afford to miss this trade of the, should I say trade of the century? Almost. Now this is a monthly chart, a quarterly chart, just to put it in perspective. This is oil. This is oil. The whole world needs oil. The world needs oil more than it needs Bitcoin. Okay, not a strike about. It's not a crack on Bitcoin. Okay, it's just putting things in perspective. Okay, the industrial economy needs oil more than it needs Bitcoin and crypto. So just keep that in mind. It's not all Bitcoin, all crypto. Don't take your eyes off other things. Okay. All right. So yeah, this thing is going to correct, and the benefactor of it is likely to be the dollar. Okay, I didn't need to go to 5 minutes. Let me look at 4 hours. So we saw that shooting star, and this, let's see, this low because all this candle made a higher low, this is higher low, this is higher low. And so what we're looking for danger is when the price starts making lower lows at these extreme levels. Once we've made, say, this reversal candle, shooting star, and within the context of looking at that bigger five-way structure with a 10x price escalation, with the woman on television also saying, I'm very proud of the financial industry for saying, listen, y'all, this thing is too rich to buy right now. That rarely happens. Okay, so this low is 123.28, and the candle, and so this is every candle is 4 hours. Okay, and so this candle, the low is 122.83. This is 123.28. 123.28. So we made a lower low, and then we made another lower low. So the downtrend has started in oil. Okay. So we got the euro nose diving. We got the British pound nose diving. We got gold. I gotta look at gold. I forgot gold. We got oil flipping. And I want to look at XAUUSD. This is the relationship of gold relative to the US dollar. It also has an inverse relationship. Now, odd thing I saw earlier, gold was rising too, and the dollar was rising. So that's unusual. But I'm not buying the gold rise thing. It's gonna fall in line. But man, it was spiking hard. Now let me explain something about price spikes. I, um, every time a price goes up, it's not exactly a sign of bullishness. I'm just gonna look at this one candle. So in the last, this is 35 minutes. It made a higher high, so it's still going up, and but we see the volume kind of coming down. So you got volume coming down on these three while the price is going up. We call that divergence. Okay, and so what happens is um it's like an auction where you've seen a lot of people in an auction. They're bidding on an item. There's a lot of people bidding in the beginning, and near the end, it's just two or three rich folks with their ego in it, and they bid the price up to ridiculous levels. That's kind of what's going on here, where the volume going down, that would be representative of, say, the masses of people falling out of the bid. So we're starting to see the volume go down while the price go up. So that's not good. Now, on that in and of itself is not uh, um, like a reason to say, got to get out now, because volume divergence can last. It can last a while, but in general, in the context of what's going on and the historic relationship, negative relationship between that gold has with the dollar, you have to take all of that into consideration. And let me go down to a 15-minute, see what that looks like. Okay, so you come to this one, and we seeing more sideways action, which is showing that the price, one, is not rising, it's rolling over, but we don't really have no lower lows yet. But I ain't got no confidence in this thing. The safe play is the historic relationship that when gold needs to correct, the dollar is the safe haven. Let's see. Let me look at a monthly just to give you some perspective. All this market and stuff on here. Let me see if this other page is crap. No go. No go. So we gotta let me see if I can show the whole. Let me see if I can take this crap off because it's hard to read with all my markings through the years, because this thing saves all your marks from past, from whenever. So okay, I want to go back to, okay, so this is where we came from back in 2000. This is, oh, this is 2020. What is this? I want to go to monthly. I want to go there. So we really get the context to see the volatility of it. So this was way back in 2011. Remember I showed that low in the dollar, and that corresponds to this, to the high here. And then gold had this decline. Then it actually went and made a higher high. And right now, the question is it going to go break higher or turn south? It's going to be hard to do that in the midst of the dollar rising. But I'm not going to say it's impossible, but it's not likely. But we'll see. So, but this is what everyone should be watching, paying attention to, because it's very strange that the dollar is rising, and at the moment, gold is rising too. Okay, that's odd. That's odd. So I would be looking for this thing to start rolling over pretty soon. But if it doesn't, it goes higher, then we're going to be in one of those rare situations where gold and the dollar both are rising. Okay. So I think you're going to hear a lot of talk about the conduct of gold relative to the dollar. You're going to hear about it today. Oh, I'm sorry. This is the point I wanted to make. Not and I can't get the answers to this question what I'm about to say until the market open. I want to look in the options market. Every rise is not an expression of optimism. Okay, uh, when when something is shorted, it begins when you short something. Let's say if you're talking shares of a stock or futures contract or forex lots, you're actually borrowing the shares, the stock shares or the futures contract or the lot from the broker, from the forex lot. You're borrowing it from the broker, and you have to return what you borrowed. You don't have to return the value. This is a very important distinction. You don't have to return the value of what you borrowed. You have to return the thing you borrowed. So if you borrow 100 shares or 100 lots or 100 contracts of, say, gold in this case, you have to return at a future date those 100 lots or shares. So if the price declines and you return those 100 shares, the price lost value, depreciated over time. You don't owe the broker the value loss. You owe the broker just the shares borrowed. Okay, so when something is being heavily shorted, it can cause a price spike. And so in the options market, we check to see if uh, the number of puts are going up. The puts are put options and bets that the thing will fall. And so the initiation of say a tsunami of puts can cause something to rise. And so that might explain what's going on. So we'll see how that goes in the morning. Because that would be one very common explanation. What's going on? That kind of happened with AMC. Okay, when you guys remember, I don't know, maybe that was a year ago or whatever, a while back, when the people they stepped into short AMC, and the rush to short it caused the price to go up, because the broker, when you initiate the short position, you borrow the shares, your broker goes into the market and buys the shares that you're shorting. And if too many people do that all at once, it could cause the price to go up, and then you start losing money. But then some people see that it's like spiking up, and another part of the marketplace will come in to buy it because they see it, spiking up. They want to be a part of it. So it has the wrong effect from the short sider's point of view. It has the wrong effect, and they end up losing big. Okay. So that might be what's going on. These might be short positions causing gold to rise. So more on that later. I may do a video later, but right after this, I'm getting some sleep. But I just wanted to have everybody paying attention from the dollar perspective, and with the eye toward oil and gold. Because that's and oh, one more. I meant to do the interest rate. I don't know if I really needed to see this. Let me see. How do I see the yield on this? On these arrows. Their own symbol. U.S. Treasury yield. They don't show it. I don't know what that symbol is on this site. Let me see. How can I maybe go here? Treasury. I can't get it. Hold on. What kind of futures? Maybe that. I do want to go back and see the world index though. Oh, now come on now, y'all start doing that too. Okay. Futures market, financials. Investing.com let me down. I don't want to see news. I want to see a map. Future. Nah, I want to see financial map. I want to see. I want to see the yield side. I am going to have to do this part later because I can get what I want on this better. Oh, they're doing maintenance. I think it's too many people on their site trying to investing.com is awesome. This stuff is very organized, easy to get to. But I will just show you this one other thing, and I get out of here, and I'll talk about the yield side later on the bond deal, so you can see what's been going on with the short term bond treasuries. I'm sorry, treasury treasury bonds. Let's see, what was I going to look at? The world indexes. Let's see what the world looks like. Blood. Let's sort it. Let's see. Okay, what the heck is that? Let's see what that is. I'm gonna check this out first. I'm gonna come back to that. I'm curious. What the heck is that? Okay. What is the CAC? This is down 4.9, almost 5%. Euro. We looked at the their currency, and we see that their index is down. Amsterdam, Australian. But I want to see what this is. The CA. I don't know what that symbol is. Let's go. Let me click it here, and then go to profile. This should tell me what's the big loser. What's the big loser? What is the CAC? See, I need to stay in the daggone. So they should tell me. CAC. I should check y'all. Y'all probably got it in the chat. What country is this? I'm gonna give up on it. But that's a big amount. 5%. That's huge. Damn. They're falling right along with us. That's an ugly looking move. Crap. Let me see something. I don't want to guess it what it is. But I will know that when I come back. And and blessing.com let me down. Yeah, I'll know it when I come back, and we'll also look at the interest rate because there's been a serious move up in the price uh, of money, the price of to borrow money. Okay, and that's causing a lot of damage. And so I'm just run through the say my hellos to you folks. Y'all up in the morning. What's up, Gold Professor? You know what's happening? What's happening? What's up, Sheed? What's up, Sheed? We here. William. What's happening? What's happening? Ramir. Seven Heavens. What's happening? Enhanced Utility. What's happening? Death Racer. Kwame was first. Kwame Triple X was first in the house. So y'all in here watching these charts, making your manosphere troll, running the circuit in the manosphere with the while the sun is coming up over here. And I want to thank y'all. And I'm gonna come back. I'm gonna give me a little sneak because my money is already in it. I'm already long the dollar. What's happening, JTK? So this is good time for me to just go and get some sleep when I wake up. Oh, probably around 9:30. I can see what the check the options market and try to solve the mystery about why gold is rising. Is that spike authentic expression of optimism? And I would see that by seeing the calls go up. Or is it a mass initiation of shorts on gold, which would show as a increase in the number of puts relative to the calls, and then with that information, I'll know that this rise really can't be trusted because it's likely to fall, just spike down, just like it spiked up. Okay, so stay tuned. With this kind of activity, I'm likely to come back on, and maybe more than likely in the afternoon, just to see how wicked it gets in the morning for the first couple of hours, and I'll likely come back, and I will have solved what these symbols are, what these countries are, in that world index, you know, and we can look at that and do a damage assessment. See who's bleeding the most. You know, but thank y'all, and I'm out of here. Peace.